MSCI recently announced that they are evaluating whether Bitcoin Treasury companies that hold more than 50% of their balance sheet in Bitcoin should be removed from their indexes. It is essential that this decision is made correctly because the logic behind removal rests on a misunderstanding of what these companies actually are. The argument is if a company holds a large amount of a digital commodity, it begins to resemble an investment vehicle rather than an operating business. I understand that perspective, but Bitcoin Treasury companies have real operations, real customers, employees, products, revenue, and GAAP operating income. They do not meet the legal or economic definition of an investment company. The only reason Bitcoin has grown to represent such a large percentage of their balance sheet is because the Treasury strategy succeeded. Strategy itself is up over 1,000% since adopting a Bitcoin Treasury. Bitcoin is long-term savings technology, so these companies that adopt this strategy and save Bitcoin for multiple years have been rewarded. It is also important to recognize that this 50% threshold is arbitrary. There is no financial theory, regulatory framework, or academic foundation that supports using this cutoff. It is not tied to volatility contribution, operating income, sector classification, or balance sheet risk. Adopting an arbitrary rule would allow subjective judgments that do not reflect how markets actually value companies. Many Bitcoin Treasury companies also use Bitcoin as their hurdle rate for capital allocation. Bitcoin appreciates faster than almost any other asset, so most real investments do not clear that hurdle today. As a result, these companies naturally accumulate large treasury positions because it is rational to save in the strongest monetary asset available. Over time, as the Bitcoin adoption curve matures and appreciation rates moderate, this dynamic may evolve and companies may deploy capital more aggressively. A temporary imbalance between treasury assets and operating assets should not be the grounds for permanent index exclusion. Companies may hold 40 to 60% of their assets in cash or U.S. treasuries. These companies are not excluded from indexes. Bitcoin is simply another Treasury Reserve asset with a different risk and return profile. Applying one standard to fiat treasury assets and a completely different standard to Bitcoin introduces inconsistent and unfair treatment across similar balance sheet decisions. Excluding Bitcoin Treasury companies would also remove exposure to an emerging corporate finance strategy that public markets have rewarded. Bitcoin Treasury companies have delivered strong performance precisely because they are using Bitcoin as money and use balance sheet strength to issue digital credit. This is a new and innovative financing model. Removing these companies would strip an entire category of corporate innovation from the investable universe and prevent passive investors from owning a strategy that the market clearly values. There's also a clear impact on the passive investors who rely on MSCI indexes for long-term investment. If Bitcoin continues to outperform most asset classes, removing the companies that capture that outperformance will cause the index tracking products to fall behind the true market. MSCI exists to provide neutral access to the full opportunity set that markets produce. Excluding high-performing companies because they hold a novel, unique, superior monetary asset creates an active bias, not a passive one. Most importantly, an index provider should not decide which monetary assets are acceptable for corporations to hold. Bitcoin is monetary savings for these companies. It plays the same role as cash or gold. Excluding companies because they hold a harder form of money is monetary discrimination. It punishes responsible treasury management and rewards companies that hold depreciating currency instead. This approach would also discourage corporate innovation. It implies companies should remain in weaker monetary assets to stay index eligible rather than adopt stronger balance sheet strategies. That is not healthy for markets or long-term capital allocation. For all of these reasons, I encourage MSCI to maintain neutrality, avoid arbitrary thresholds, and continue including Bitcoin Treasury companies in their indexes. Indexes should reflect the market as it exists, not pass judgment on which business models or forms of money are acceptable. Thanks for watching, everyone, and see you next time.